Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today's Tuesday. It's October the 18th. It's 8:07 in the morning. The market's going to start gearing up in about an hour and 23 minutes to be specific with you. Now, as you can see here, we're up almost 500 points on the Dow pre-open. We're up about 228 points on the NASDAQ. There's nothing random about this. And look at the S&P up 70. This is really, really great. Why is this happening? Earnings are coming out better than expected. So, for example, we have Netflix coming out today. The stock is up. It gained 6% yesterday. It's up 2%. I don't know if the numbers are out yet, but they're definitely coming out today. We had Goldman Sachs report. The number was better than expected. The stock was up over 2% yesterday and already up almost 3% pre-opening bell. And again, just want to remind you, it's not because the numbers are really great. It's because they've been beaten down so damn much. So Bank of America came out with better than expected numbers. Charles Schwab's did not. Today we've got Netflix. You've got Albertsons, Goldman Sachs, already they came out, a lot of other companies, and I'll be reviewing and giving you a cumulative at the end of the day today or in my VIP room if you're there. But so far, the numbers are coming out better than expected because these stocks have been beaten down to death. Like, for example, I was just talking in my VIP room yesterday. Look at the prognosis for Netflix. Down 33% year over year. That's what's baked into the EPS. It's hard not to beat that. You know what I'm saying? Or how about Tesla? They're expecting EPS, earnings per share, to be down 46%. It's kind of hard not to beat that. So it's not that these numbers are coming out really great. They're not. I can assure you they're not. But they're coming out better than expectations. And that's what caused the rally last time around. In June, this rally right here, let me just kind of show you. This rally right here was caused by earnings. This was caused mostly by downslope in the global economy, and now earnings are taking us back up. U.S. is looking better than global economy, and that's really, really important right now. So far, earnings are better than expected, not because they're great, but because they've been beaten down so damn much. Now, as far as Fed news, we don't have too much Fed news this week. It's actually a pretty calm week. We have Beige Book, we've got housing starts, we've got existing home sales tomorrow, but earnings are really out marking everything in terms of what investors are looking at and what they're focused on. Now, we do have industrial production report. It's coming out in about an hour and 6 minutes, and anything positive would be really, really good. And capacity utilization, I'm hoping the capacity utilization number will stay near the capacity. So near the capacity expectation. So again, industrial production, we want a positive number, and that's coming out in about an hour and a few minutes after that. Volatility, as I mentioned to you, I told you guys that it looks like we peaked out here, and it looks like we did. And I think volatility is going to be coming down probably to the 25 level, maybe even 20 level. But I think we're done with this turn because, again, I think earnings are going to come out better than expected. Let's talk a little bit about global economy and about what we had overnight to get us into today's session. So the gains yesterday were primarily driven by technology, consumer services, and industrial sectors. These sectors are not in recession-friendly sectors. So that's a very, very positive sign. Industrial stocks do not go up in a recession. Consumer services definitely do not go up in a recession. And technology is the last sector to go up in a recession. So this is positive. Bank of America, as I expected, came up with upbeat quarterly results, lifting optimism about corporate earnings season. Other companies have been doing well as well. Analysts expect earnings for the S&P 500 companies to grow 3% in the third quarter, down from 4.5% at the start of the month. That's only 18 days ago. And I'll be giving you full updates of where we stand in my VIP room or in the morning sessions. I just want to get a little more earnings to come out. I think we were only like 10% as of yesterday. So I want to let them roll a little bit. Meanwhile, I'll be giving you updates on the individual ones and the cumulative as they come through. Now, manufacturing data in New York region was weaker than expected, boosting hopes for a Fed pivot. Don't hold your breath. Meanwhile, U.S. rate futures have priced in a 96.5% chance of a 0.75% rate hike. That's well baked into the market, 96.5%. and a 3.5% of a supersized 100-point base hike. It ain't going to happen. But 75, unless something drastic happens over the next 2 weeks, that's what we're going to be seeing. Today, all eyes are focused on the industrial production report. It's coming out in less than a couple of hours, in less than an hour, actually. Economists are hoping that the number is positive. See here, 0.1 positive. Anything positive is good. Really, anything positive is good. 0.1 is what they're expecting. But look, consensus, anything over negative 0.2. So even if it's negative 0.1, it'll be okay. But again, I'm hoping that the number will be better than that. Again, Chinese Shanghai today closed slightly lower as concern over Chinese economy continued to affect stock market, with President Xi signaling the country has no intention of scaling back its COVID-0 policies. Same time, Japan closed in the green finally, recovering from sharp losses in the previous session. And again, the big factor is going to be earnings. Albertsons, First Verizon, Goldman Sachs already out. I can't wait to see how Interactive Brokers did. Let's see how they're doing right now. IBKR, just out of curiosity, how they're doing it on the opening. Let's see here. Nothing pre-opening, so nothing out yet. Again, some of these may not be out. They may not be big enough. How about Johnson & Johnson? Let's look at J&J. J&J, let's see what their pre-opening bell looks like. Up 2%, already above our red line, our point of resistance right here. Very, very nice. Let's look at a couple of more here. Why not, right? We have time. Lockheed Martin, definitely. I have big hopes for Lockheed Martin. Oh, yeah. Up 2.5%. I like it. Up $9. Right? I was talking to somebody in my Algo Club, Intro to Algo, about Lockheed Martin. I think it was Kevin, actually. Anyways, I hope you're watching this, Kevin. Let's take a look. Let's see. United Airlines. Let's take a look at United Airlines. Now, obviously, the fact that they're up right now isn't as material because the stock market is up almost 500 points. But this is good. The fact that these stocks are looking good is impressive. And again, look at this. Negative 46% baked into the market. Negative 33% baked into the market. It's too much. These estimates are way done. Now, looking at momentum, I want to show you guys, and this is good news. We had a really strong day yesterday, but look at the number of stocks making 20-day breakouts. It's only 58. Now, if you remember, I was showing you when we usually peak out, the number goes to about 500-600 to the upside, and to the bottom, it goes sometimes to about 700. The fact that we're only seeing 58 stocks, and I know the number's off, 58 versus 14, but this is nothing. This is a very choppy, random market. We're not even getting near, we're 90% away from peaking out. So there's a lot more upside potential in this market because, as I said, only 58 stocks are making 20-day breakouts. So we've got a lot to go before we get stretched out. Very important, actually. And you know what? Today's Tuesday. Tuesday, we talk about the strongest sector, strongest stock, weakest sector, weakest stock. I'm not going to forget about you. So let's see. We've got energy, healthcare, consumer staples. Gee, it all makes sense. And on the bottom, we've got real estate. Ooh, real estate. All right, I think we can make that work. Let's see what we've got here. So. Let's see here. Let's go. How about this? Marathon Petroleum or ConocoPhillips. Either way, you're good to go. Let me just show you a graph. COP, they're both hovering right around swing highs. See that? Look at the 6-month graph, right around swing highs. Now, and MRO, Marathon, not bad, right near congestion levels. I think Marathon was one of them. Let's see. Marathon Petroleum, MPC, sorry. I mix these two up all the time. Yeah, Marathon's looking great. Also near swing highs. So definitely, you want to go with either Conoco. Devon's really good. I won't hold you back. So you got Marathon, Conoco, or Devon, or Exxon. Any one of those will look great. Now to the upside. Oh, my dish, my favorite stock. Wink. Let's see here. What do we got here that looks interesting? Right here, Vornado Realty Trust. Right there, Vornado Realty Trust. And if we go lower, you've got Digital Realty Trust and American Tower Corporation. So you got American Tower Corporation, Digital Realty Trust, Vornado Realty Trust. All of those are real estate REITs. But also, just FYI, CarMax is not looking good. Dish is not looking good. I wouldn't go with like FedEx or Intel because they're too big. Nvidia, they're too big. They can blow up. But these smaller stocks like Dish, no. So communication services is still down there. So you may want to cheat just a little bit. But if you want real estate to short Vornado, you've got, what did I show you? Digital Realty Trust. And there was one more here, I think. American Tower, AMT. Those are all real estate companies. But again, I would be cautious right now with real estate. And I would also maybe think about the communication services, which is what I was saying. And on the communication services, you've got Dish, you've got Charter Communication, Charter and Dish. I don't think those are going anywhere fast. Let me take a look at something. VFC. I want to know what is that VFC. Is it real estate? No, consumer discretionary. Okay. So you've got your hit list for today. Now let's look at levels. That's like my most fun thing to do. Look at levels. Look at that, up almost 500 points. So we're back into the zone of safety, which I'm very happy about. The next point of resistance will be 31,000. We're almost there, and then after 31,000, we've got 32,500 on the QQQ, which is also back in range. See that right there? It's back in range. The next level is 280, 250, say. I'm ballparking it. And on the SPY, the next level up is 378, and then you've got 388.50. Folks, I think we're going higher simply because earnings are way suppressed. Also keep your eye on industrial production report and keep your eye on the energy sector. If the energy can start rising again, it'll give the broad market that exposure that it needs. Now, before I wrap this up, all signs are pointing to a global energy crisis headed our way this coming winter. Oil demand is high, supply is dangerously low. Despite all the doom and gloom, Joy of the Trade, Jeff Zananeri, he's identified a potential opportunity amidst this growing energy crisis. He's going live today at 1 p.m. Eastern Time to reveal all the details. It's a presentation that you do not want to miss. Click the link below, sign up now, check it out. Do not delay, do not procrastinate. Jeff is red hot. You want to check it out right now. Follow the link below, do it now, and have an amazing day. Bye, guys. Any questions, comments, feedback, support at marketgeeks.com. Post comment below the video in the YouTube channel, and I will respond. And if you've been doing so, I appreciate it. Have a great day, everyone. Bye.